Okay, this is Brian Stoll for Timing Strategies for Friday, November the 9th, but we're recording this on Sunday, November the 11th, looking for Monday's price action. Well, like we mentioned, if you look at our October 30th, 31st, and all the way up to our November 5th video, we got long right here on the 5th, 30%, and again, why we only got long 30% is because risk management. We don't know what's going to happen, so we have to manage our position by getting long 30%. We got the bounce we were looking for. We were anticipating a test up into that range. We didn't get that test up into the range. Instead, if you look at our October 30th, 31st videos and so forth, the ones that we put in around here where we got short on on October 30th. Instead, we got the scenario, obviously, as you see, no sense in covering it, is that test back down into the lows of this range. Worst case scenario, we could get a low test all the way down to the 141.5, but we did get long on Friday, another 30%, because we had a close on the lows. We had a major sell-off, obviously. That's not quite the extreme that we would like to have saw, but we are now 60% long in our Ridex end-of-day models. And again, that is still risk management, because the worst case scenario can still evolve. A worst case scenario, we can get a crash, and so what? Then we still have another 50% dry powder almost, and we can use a 2 beta system, which will average in at much better prices. So what we're looking for on Monday is one of two scenarios: either a gap higher or lower, a test. I'll do this a little better here. Potential a gap higher and a run that takes us all the way back up and wipes out those highs of yesterday, or potentially a gap lower in the morning. That's no good. A potential gap lower. Dang thing, I take that price magnet off. Okay, there we go. A gap lower, and obviously one of two scenarios can unfold there, as we get a big meltdown that takes us down into that 141.5 level, and then from there we would absolutely add into our position and get long from there on a move back up and a test back at least into that range of Thursday, or that gap lower scenario where the market gaps lower, just hangs around for just a little bit, and then what you call a Larry Williams oops setup, which is a really neat setup, because it gets everybody leaning one way, and then it just runs the other way before anybody got it. As soon as everybody gets loaded up on the other side, it just jams it up. And that would be either one of these scenarios: the first one where the gap higher and a run higher, or a slight gap lower, or again we get a gap higher in the morning, just a wash out of those lows, enough to get everybody leaning that way, and then whammo, right back up again. Now, what are the probabilities of that happening? In the environment we're in now, very difficult to say. But again, using an end-of-day model, we have to anticipate, the worst case scenario, and the worst case scenario again is that gap lower, and from there, just a big washout, and see what happens going into the end of the day, what we do at that point. Sooner or later, there should be a bounce, just like anything, from these levels. What I want to point out, though, is the XLF, for the financial index. Obviously, if you watch any of the market stats, actually did the best on Friday, and that was from the deepest oversold level that it's been in the last 2 years, just about. What we should see, again, if we get a little bit of help out of the banks, these skunks that keep causing the problems with the overall market anyway, is if we can get a gap lower on the banks using the XLF, and those banks take out the highs on the XLF of Thursday, right there at, where's that price, 30.5 on the XLF, then you know what? Odds are the market's on its way back up. So keep a real close eye on that Thursday high level of 30.5, and if it takes off and it takes out the high of Friday above that level, Friday's high, yay, Friday's high at about 31, give or take 31. If we can take out Friday's high, Thursday's high, and Friday's high, then we should see a very strong move, just washing all the shorts going out the other way. That would absolutely give a lean to the, a push to the market, and that's not what we want. Another on the side note at the SMH. SMH actually was doing pretty good too. It did not get beat as bad as the rest of the market, and I think the SMH is dead money, but the banks and the SMH being as oversold as they are going into this over the last 2 weeks, 3 weeks, and then on Friday the SMH and the banks not going down anywhere near as bad as the overall market, portends, in my opinion, really the kind of price action from the sectors that are going to lead going back up and cause the rest of the market. So I am anticipating a bounce. As far as the oils and things of that nature, forget it. Now, those are spread charts at darn software. XLE, same thing. Never mind. Okay, well, we'll get to that next time. SPY, SPT. So again, depending on where we get the price action, I'm very much looking for a rally in, and I'm sure everybody else is. Right now, the futures aren't showing any kind of hope for that. They're down about 4 points Sunday night at about 4 o'clock California time. But we'll keep you updated, and we'll post on Monday as to what we've done. And please feel free to give us an email or give us a phone call at 1-800-675-2131, or check out our website at timingstrategies.com. You can drop us an email from there. All right? And to everyone, good night.